Welcome to Monday's Market Outlook here at Wealth Creation Investing. My name is Matthew Buckley, the Chief Investment Strategist here at WCI. Well, after a pretty interesting week last week, we're also off to an interesting week this week as well. Markets feeling a little bit of pressure, mainly because of overseas. Like we talked about last week, last time Greece sneezed, the U.S. caught a pretty significant cold. We recovered from that cold, but guess what? Now that sneeze, so to speak, has moved on to Spain, and that's not good. Let's talk about Spain real quickly, because Spain is not Greece. Obviously, for all of you Magellans out there, they're completely different in the sense that Spain doesn't have as bad of a debt problem or tax problem as Greece. In Greece, people actually are proud and talk openly about how they don't pay taxes to the government or how much they owe to the government. It's actually kind of a running joke about tax avoidance. But besides that, we all know about the public sector unions in Greece and austerity, which is just a fancy word for cutbacks, right? You know, austerity measures are being met just brutally in Greece, and the guys who are up for re-election who said, hey, we got to get our fiscal house in order, are about to get voted out. And the same thing with Sarkozy in France. We have the socialists that might win over in France. But Spain, S&P actually downgraded about 11 banks, which is not good, including a big one, Banco Santander, which is a huge international bank. They actually bought Sovereign Bank, who I worked with personally in Boston, Jersey, and Pennsylvania last month, I think it was, doing some consulting, and this just isn't good, folks. Spain starting to catch a cold will not be good for the United States, especially this time of the year. Why? Let's say it. Let's all say it together. Sell in May and go away. So we're getting ready to see the beginning of the summer doldrums. Last day, trading day of April here, and we're seeing the markets really flat. One of the reasons it's also flat is because U.S. income and personal spending, income actually rose in March. Which, hey, that's not too shabby of news, right? So you think the market would be happy, but check this out: the Chicago PMI number, it's a manufacturing gauge, let's just call it. It fell in March. So like we talked about last week, we're kind of seeing this bipolar market, which is great if you trade options, and it's tough if you're new to WCI and you just trade stocks. You definitely want to learn how to trade options and even Forex, especially with what's going on in the overseas currency markets with banks getting downgraded. Just huge potential for profits out there. Hey, before I forget though, real quick, if you haven't registered yet, make sure you go to this link, topgunoptions.com, academics-risk-management. Wednesday morning at 9 a.m. And just fill in your name and email down here, and we'll send you a reminder. We're going to talk about some risk management, because a lot of folks have been emailing us like, hey, we need help managing risk in this volatile market. So you can't make money if you're losing money. Does that make sense? I mean, think about that for a minute. It's blindingly intuitive, but if you're losing money, you're not making money. So we're going to show you how to manage risk. I'm going to give you an actual checklist, a physical checklist that you can use in your trading. And if you show up at the 9 a.m. one, we're actually going to put a trade on to show you how you can capitalize on managing risk in this volatile market, or not so volatile market. And that leads me to one of our model portfolios over here at Top Gun Options. Now, if you're new to the markets, or you've been around the markets for a while, and you really don't know what options are, this is kind of what the 500-pound heads call the fear index. It's called the VIX, the CBOE, Chicago Board Options Exchange Market Volatility Index. And the chart of the past 6 months just shows, kind of one of those bumpy water slides, but it's a slide for life. Look at this. We're all the way down here. Let's collapse that from 6 months to 3 months. Volatility has just been at record lows here. And look at this, plumbing the mid-teens here. And one of our traders at Top Gun Options put on an advanced trade last week, selling 115 I believe it was May puts and buying the 14s as a hedge there. Great trade, just because volatility, especially with the sell in May go away, is either going to hang where it is, or barring some Spain falls apart, Israel attacks Iran, it's going to spike. This is just absolutely insane. And again, folks, you're going to hear me say this until my last breath. When vol is cheap, you buy it. When it's expensive, you sell it. And that's the tactic we're going to cover Wednesday morning in our risk management session. So volatility and a proxy for the VXX, since the VIX trades 30-day futures and all sorts of other stuff. A good proxy is the Barclays iPath S&P 500 VIX short-term futures. So take a look at the VXX. Let me get rid of my drawing here real quick. Again, we have a trade on the VXX on, and again, folks, volatility has never been cheaper. You're getting ready to see the MACD cross here. Last time they crossed, what happened? We got a nice spike in volatility. Last time they crossed down here, we had a huge decline in volatility. So that MACD is kind of it's a lagging indicator, but guess what? When I see something like this happening, especially after some downward move in the VIX, and now we're starting to see VXX, we're starting to see a little move up, right? What are we seeing today? We're up 2.5% on the VXX. So, folks, if you don't know what the word volatility means or anything like that, you really need to. If you're new to WCI and you just trade stocks, we're going to help you out with your stock trading, but we're also going to teach you a little bit about options, because options are really a great way to hedge and potentially profit in a market such as this. And you can profit using options whether the market goes up, down, or sideways, or you don't know which way it's going to go, which is great. With stocks, you got to do the buy, hope, and pray method, which is not the way you should be investing. So, big week coming up. As far as reports as well, tomorrow all eyes are going to be on the ISM number, Institute for Supply Side Management. So we got a bad Chicago PMI number today, but we got some good news on income. So ISM tomorrow, but we also have all eyes. It's going to be a sideways week in my opinion. All eyes are going to be on the jobs number on Friday. It's going to be the beginning of May, and the jobs number is going to be absolutely critical. So everybody's hanging on next week this week for the jobs number that's going to come out, I believe, on Friday. So keep an eye open for that. Our model portfolio over at Top Gun Options, a WCI subsidiary, is doing well. A lot of our hedges are doing well. Some of our positions, Apple actually going to the downside here. So we have an iron condor on, still not in danger. I mean, we have a 540, 680 short strike. So that iron condor is fine, and we've actually captured 80% of the credit we took in, and we are up well over $3,300 on that position alone. Amazon taking in the shorts a little bit just because it's still on that rally from last week. And folks, this is what we call a short squeeze. I mean, Amazon's a great company, but let me go back to that quote real quick. A D, for a whole bunch of reasons that they get a D there, but this is what we call in the industry a short squeeze. And I drew these last week. What a huge gap up. So people who were short Amazon, who said, short the stock and said, you know what, I don't think Amazon's going to knock it out of the park, they are licking their wounds today and having to buy back those short positions. When you buy the stock just because you're short or you're bullish on it, it's obviously going to make the stock go up. So that's when you hear the term short squeeze, that's kind of what's going on with Amazon right now. A lot of the 50-pound heads that I talk to and trade with every day, they're like, oh yeah, there's a short squeeze, and Amazon should get back into its normal range, which is why we put on a May iron condor. It should settle between these goalposts that we laid out for it in these iron condor. So right now it's kind of skewed to the left side here, but we still have just about a 50-50 chance of breaking even there and collecting that $2,200. I do think Amazon will revert to its mean. It's called. So good stuff going on at Top Gun Options. Like I said, make sure you go to the and sign up for our risk management page. You should have got an email on it, and And if not, go to topgunoptions.com/academics-risk-management, or just hang on until the end of this video, and we'll go ahead and redirect it to you there. But keep an eye on the ISM numbers tomorrow, because the PMI wasn't good today, even though income and personal spending were up in March. ISM is going to be important, and the jobs numbers are going to be important on Friday as well. And I'll be back with you on Friday to debrief you and see how the market was, and see if we really are going to sell in May and go away. So Matt Buckley, the Chief Investment Strategist here at WCI, thanks for joining me. Have a great week. Happy hunting, and make sure you hedge.